Hello everyone, this is Dean Johns from 9258 Wealth Management. The deadline for 2020 tax estimates is fast approaching as the fourth quarter estimate is due January 15th. This is the last chance for you to pay in what is needed to avoid underpayment penalties for 2020. For those that are self-employed or have substantial income outside of a W-2, estimated tax payments are a requirement. While we typically call these quarterly estimates, they are not actually due quarterly, as they're due April, June, September, and January of each year. Also, while we call it an underpayment penalty, it's simply an interest charge, and the current rate is a very reasonable 3%. Most taxpayers will pay safe harbor estimated tax payments of at least 100% of the prior year tax liability, or 110% if they're making over $150,000 a year. Most states will follow these federal rules, but please check with your tax advisor to confirm. Another method that may be more beneficial than the prior year safe harbor method is to pay 90% of the current year tax. If you had unusually high income in the prior year, or your income in the current year has decreased substantially, you certainly don't want to be paying estimated tax payments based on that higher prior year tax liability. The goal here is to keep the money in your account, not sitting with the IRS. Keep in mind that most tax software and tax preparers calculate safe harbor estimates assuming the same level of withholding as in the prior year. So check your 2020 year-to-date withholding to make sure it's as much as you had in 2019, or your safe harbor estimates will fall short and you may have some underpayment penalties. Additionally, if you make most of your money later in the year, you could consider the annualized income method. This allows you to pay less estimated tax payments earlier in the year when you have not made as much money, and pay more later in the year to catch up when most of your income is actually earned. One other cash flow strategy to consider is that withholding is deemed to be pro rata throughout the year, regardless of when that withholding actually occurs. So for business owners able to pay themselves a bonus in December, they could use that to withhold the required amounts for tax for the entire year. The same concept applies for those doing substantial IRA distributions. Instead of doing tax withholding each month with your distribution, you could wait and do one distribution in December with all of the tax withheld to cover whatever is projected to be due for that year. This will allow you to keep the money invested for as long as possible until the taxes are ultimately due. And at the end of the day, every taxpayer must pay in the lesser of 90% of the current year tax, or 100% of the prior year tax, or 110% if you're making over $150,000, by January 15th to avoid any underpayment penalties. Our advisors at 9258 Wealth Management are happy to advise you on your cash flow plan for 2021 for estimated tax payments to avoid underpayment penalties. And if you have any questions about what is still owed for 2020 by January 15th, please contact us immediately.